place where we try and craft your trade. So you're welcome. This is, after all, the episode week of 2024. One is that all views are personal, and that definitely all investments are subject to market risks. And so any advice on this, please also do your own research. Verify the numbers, because by the time you look at this, the data might be old, there might be errors. So yeah, that's sort of where we start at. So once again, hello, I am Devjyoti, better known as DJ, and I'm here to help you craft your trade. You can find me at TheTradeStylist on YouTube, X, and on Instagram as well. So once again, we start with always a prayer that may the trading gods be with us always. And from there, we go on to the market update. We look at here how the markets have performed over the week. And of course, we start with softs, where we see that positively almost all of the softs complex has been pretty strong. Robusta gaining, Arabica gaining roughly 1.2 and 1.7%. But it's cocoa, which is at the top of the town for the last almost a year and a half. It's beating all records in the last 50 years. It's contract high, which means the prices have never been this high. And nearing almost $9,000 per metric ton on the US market. It's almost 7,500 pounds on the London market. And that's the story that's continuing throughout the newspaper, that there's a huge shortage, and we sort of have heard almost everything about it. On the other side, we've got orange juice, which is roughly at around negative 1% week on week, but it's still pretty strong compared to where the numbers usually are. Cotton, roughly down by 2.6%, still positive overall. Then sugar, slightly down week on week, and it's sort of facing resistance, but not made a decision. As you remember, we have an active trade on sugar. It's still valid, still active from my side. Going on to the grain segment, finally some positive week. Corn eking out a small gain, but then wheat slightly jumping by 5%, and we're going to talk about it a little bit more in this trade. Soybean, a little positive as well over the last 2 weeks, with 1200 into hold it out this week. It came back down below, but that's a pretty positive sign. Soybean meat also a little positive, but soybean oil lost by 3.7% to close to 47.75. And if we look at the YTD numbers, we can definitely see that people like the US are so far positive. Robusta definitely also up. Arabica should have followed it last year. Cotton also positive, almost 20%. Grains are now, except for corn, sort of seem to be catching up. Soybean oil almost at the same level. Soybean roughly between 10 to 20% down. Soybean meal and corn still bearish, still calm along compared to where last year at this time. Forward, we look at, of course, the trade graph. We brought this section forward, and first we start with the sugar futures, which is where we have an active trade. And as we can see, during the week, it did break down below 21. It didn't stay there. Went back up, gapped up, but then yesterday again, it was down again. Now, at this point in time, my trade still stays valid. My levels are still valid. So I have not taken out this trade. Some of you have, I remember it being previous episode, might have gone down at the 2170 levels, making a small profit. This market seems to be undecided, but as of now, if it crosses the 2175 sort of number, it does seem that it will next start at 35. So again, this is but at the same time, it also might be that the market is trying to find ways where there is a possibility to buy also that and demand that might be the positive influence that it needs to start rallying again. Alternatively, it can fizzle out and go in the direction that we thought or expected it to be in its initial days. So yeah, still undecided on that side. Looking at corn, well, corn is trying to do a base formation, so I'm still long on corn. The levels are still okay, but it is not sort of strong. It's still slightly positive. We're still, I think, I went long enough probably time to take a long with the stop loss somewhere around the 570s, 560s. Um, and I think that's something is looks like a potential trade. And wheat does have the potential to go hugely up because the balance sheets are sort of tight. And if Ukraine, the war impacts the shipments in any way, this market can jump without any notice whatsoever. And we've seen this happen in the last 2 years. And I think there's always a positive potential for wheat to bounce back. Uh, Going from there, now we look at trade speak, and that's primarily about what is being said about the market and why is it that markets have behaved like this. And the story that we come across is twofold. Number one is the fact that while corn has been talked about quite a lot, that there's a massive surplus in the US. We spoke about it in the last episode, and you will also hear it about in the reports. The fact is that it's also one of the cheapest meals which are available worldwide. Rice, we know, has been impacted strongly because of the bans of exports from India, shortage of crop otherwise. Wheat, on the other hand, while it's still cheaper where it was before, it still is expensive, and availability is definitely slightly tougher compared to maize. So the fact that wheat, if it bounces, will become expensive, and that I think also pulls corn up. I do think there would be a positive correlation, but the hedge funds may decide, well, this is a pretty record surplus, and on top of that, corn again seems to be showing massive acreage in the coming year. And that's what the USD was projecting. So that means expectation is that with increased yields in crop size again, whereas there will be on top of a bearish environment, another bit of bearishness on top. Argentina, on the other hand, has slightly reduced their corn forecast at 2.5 million metric tons, roughly. Does it make a dent on the global landscape? Possibly not so much, but it does definitely have an impact, especially if the market starts thinking that some of these yields, some of these numbers might be sort of revised. So I think that's something which correlation, oil prices moving up, sugar prices moving up, would be typically that soybean and soybean oil also start pulling their weight, and we might see a positive correlation in that as well. Moving forward, we go towards trader peak, which is basically the points of interest. And we start with the headlines. Well, definitely global wheat prices, as we said, are up due to the ongoing conflict. The weather concerns, again, potential lower soybean yields. This is particularly about Brazil. There are concerns about the potential shortage, which will push prices higher again. This is primarily related to soybeans again. EU, on the other hand, has proposed a ban on Russian fertilizer imports, sort of to try and create more pressure on the war. And India has restricted palm oil exports again to control domestic prices. This is something new, and I think this would typically have some amount of impact on the fact that global palm oil prices might actually go up and pull other oils along with them. African Development Bank invests in climate smart agriculture. This is primarily Africa related, but it's a good thing that we have some of the largest finance banks looking at this continent, investing in something that's long-term sustainable. And finally, US announces once again record of planting estimates, which I think is where the market has been a bit bearish, not reacting very strongly. But we have to look at how the market behaves in the coming week. The reports for the coming week, definitely US Fed chair speech, US GDP growth quarter-on-quarter, and then France and Italy's inflation rates. Pretty important to see how the Europe countries, one good, one not so good in terms of economies, is doing in this transition scenario. So this week in Contrade we finally have something great to talk about. It's not always about bad news or let's say interesting, but probably the wrong type of stuff. This is more about the good. And this week we talk about a gentleman called Sidney Rothberg. Now, if you've been in the news, if you've following the news for some time, you would hear that his art collection is now coming up for auction, and that's an incredible art collection, probably one of the most influential or the largest art collections that are coming under the hammer in the recent times. So, Mr. Rothberg, the reason I've been a fan was that, of course, he was on the board of comics for a while. And then, of course, he was the person who basically led the merger between NYMEX and comics at that time. This is around 1994. Yes, I actually got involved this when I was researching in 2008, 2009, roughly. So 15 years after this actually happened, but he was definitely a legendary figure. Commodities trader who typically commute from Philadelphia to New York. Funny enough, in Apex, sort of trying to do exactly the same. Our offices are also sort of like that. What is inspiring is that instead of spending his money in a lot of frivolous stuff, which he could have, he would sort of invest them in art. And it was a smart decision, of course. It was also a financially small decision. But the fact is that he also have a real passion behind creating this very eccentric art collection, which today is probably worth at least a few $1 million. And I'm talking about difference. But the auction was maybe that would be an amazing sale for the state. So if you look at it, he would see how his thought process has moved in this generation, how he has sort of created that persona of a trader, also not a lover, who's also a journalist, is also something who's at a different kind of artisans. And typically, if you look at art collectors, you would see that they focus on a certain side of the art. They don't necessarily look at multiple sides or multiple types of artisans. And this is what you find in Mr. Rothberg's collection, which is different from everybody else. And I think these two pictures directly show that difference. His art is not about one artist. It's not about one type of painting. It's not about a single or coherent theme. But it is every single one of pieces interesting, eccentric, and yet valuable. So, and that's what defines this person as a trader, right? So the fact that he could see opportunities across a very different, I'd say confusing information, opportunities across different groups of understandings, and whether it was abstract, whether it was portraits, whether it was impressionist, he has a collection between all of them. And each of these paintings, typically, smartly enough, seems to be selling at a positive tone. But that is hype, whether that is related to the person he was, whether that is brand, or whether that is basically some kind of nostalgia or ownership. At the end, the fact is that his trading decisions also get factored in and get shown into this particular art collection that he made over his life. And even after so many years of his death, the decisions that he made are still relevant and still positive. And that's part of the reason that we speak about Mr. Rothberg in this episode. So yeah, rest in peace, Mr. Rothberg, and I do hope your estate does very well. Moving ahead, we look at Trade Next, which is particular for the next week. Well, we look at Trade Deeper, we look into Maze, definitely. We look at the next trade strategy, and then, of course, we like to trade some more. Finally, yeah, I hope you've enjoyed this episode once again, and that I've been able to add some value to your weekend. It's been decent time, and I'm just back to office from my own. So yeah, look forward to your views, and also I hope you look forward to the next episode, which comes out on the 30th of March 2024. Cheers and have a nice weekend.